All right, let's get right into it. We're talking about what might just be the boldest, most radical economic experiment happening anywhere on the planet right now. Seriously. Argentina is making a massive bet, a real high-stakes gamble on a new idea, and they're putting their entire future on the line to do it. It all boils down to a question that sounds incredibly simple, almost too simple. What if a country, after decades, literally decades, of drowning in debt and inflation, just stopped? What if they just decided to only spend the money they actually have? That right there is the core of this whole plan. And that simple idea leads us straight to the heart of the whole strategy. It's a concept they're calling deficit zero, or zero deficit. And look, this isn't some vague goal or a gentle suggestion. No. They are treating this as an ironclad, unbreakable law. So what does zero deficit actually mean? Well, think about your own household budget. It's pretty straightforward, right? You can't spend more money than you earn, at least not for long without getting into some serious debt. Deficit zero takes that exact same common sense logic and applies it to an entire country. If tax revenue goes down, guess what? Government spending gets sloshed automatically. It's simple, but yeah, it's also pretty brutal. And believe me, this isn't just talk. The government has put some hard numbers down in its 2026 budget, and they're not just shooting to break even. Oh no, they're aiming for a surplus, even after paying the interest on all their massive debt. And here's the kicker. It means no more printing money out of thin air to pay the bills. The central bank's ATM, it is officially closed for business, at least for the government. Okay, so that's the plan, but the billion-dollar question is this crazy bet actually working? To figure that out, we have to look at how the financial markets are reacting. The people with actual skin in the game, with real money on the line. Let's take their temperature, see what they think. So the number one indicator everyone is watching is something called riesgo país, which just means country risk. The easiest way to think about it is like a credit score, but for the entire nation. If the number is high, lenders basically see you as a high-risk deadbeat. If it's low, they trust you'll pay your bills. And just look at this number. By the end of 2025, the projection shows Argentina's country risk has just plummeted down to 580 points. I mean, for a country that's famous for defaulting on its debt, this is a huge vote of confidence from the market. It's a really big deal. But the job isn't quite done yet. So that begs the question, right? Why is everyone so laser-focused on this one specific number, 500? What's the magic behind getting below that threshold? Here's why it's so important. Getting below that 500-point mark is like getting the keys to the kingdom of normal finance. It means Argentina can finally go back to the international markets and borrow money at reasonable rates, around 9%. That lets them refinance all that old, super expensive debt. It's their ticket out of the trap they've been in for years. Okay, another huge sign that things are stabilizing is what's happening with the US dollar. See, for years in Argentina, there were $2, the official one, and the black market one they call the dollar blue. And the gap between them was massive. But now, that gap has pretty much vanished. I mean, we're talking about a gap of only around 4.4%. That's tiny. What it tells you is that the panic is over. People aren't desperately rushing to the black market anymore to get their hands on dollars, and that just sucks all the power out of it. It brings a real sense of calm. So, okay, the financial picture is definitely looking better. But how did they do it? What was the price for all this stability? Well, as you can imagine, this stability didn't just happen by magic. It came at a very, very high price. To balance the books that quickly, the government had to make some absolutely brutal cuts. So let's pull back the curtain and look at the fine print, see what got sacrificed along the way. Right at the center of all these cuts is a really controversial piece of the new budget, Article 30. What this clause does, in a nutshell, is it lets the government just rip up old laws that used to guarantee a minimum amount of money for things like education and science. It basically gives them a blank check to cut funding wherever and whenever they need to. And just to be clear, these are not small tweaks around the edges. We're talking about getting rid of a law that mandated 6% of the entire country's economic output had to go to education. Think about that. And it's not just education. Those guaranteed funding streams for science and technology, for technical schools, even for national defense, all of them, suspended, gone. And the result of that? Well, it's this staggering number, a drop of nearly 48% in real spending on education and culture, compared to just a couple of years ago. When we say real spending, that means after you account for inflation, so it's a massive cut. This is where the true cost of that zero deficit promise becomes painfully clear. So, when you make a shift this massive, you're essentially redrawing the entire economic map of the country. It's no surprise that it creates a new set of winners and losers. Some industries are set up to thrive, while others are, well, they're getting left in the dust. So, let's break down who's who. Okay, so on the winner's side, you've got sectors that love this kind of stability and are hungry for foreign investment. We're talking about energy, especially with Vaca Muerta, mining, the financial sector, and the knowledge economy. But then you look at the other side of the coin. Public construction has pretty much ground to a halt. We just saw what's happening in education and science, and of course, with all this austerity, everyday people just aren't spending as much. And this is where things get really interesting. You see this huge disconnect between what the government thinks will happen and what the markets are forecasting. The government is painting this really rosy picture for 2026, super low inflation, booming 5% growth. But then you ask private analysts, and they're way more skeptical. They're predicting inflation will be at least double the government's number, and growth will be much, much slower. The question of who's right here, well, that's going to determine pretty much everything. So, all of this brings us to the end game, the final hand of this high-stakes poker game. Argentina has pushed all its chips to the center of the table. They are all in. This is not a bluff. This is a fundamental, deep-seated change in direction. And at this point, there is absolutely no turning back. You know, one analyst I read put it perfectly. They said Argentina has crossed the Rubicon of orthodox stabilization. It's a fantastic line. Just like Caesar marching his army towards Rome, it was a point of no return. The government has made an irreversible decision. They are 100% committed to this path, for better or for worse. So what happens next? It really all boils down to two huge critical factors. First, will private investment actually show up? Will companies feel confident enough to pour real money into the country? And second, and maybe even more important, what's the social tolerance for all this pain? How long can the people of Argentina hang on through these tough times for the promise of a better future? And that ultimately leaves us with the final massive question, the fundamental trade-off that's right at the heart of this entire gamble. To get a stable economy, Argentina has had to sacrifice so many of its long-standing social protections. So the question is, can they ever get both? Is it possible to have both stability and protection? Or is one always inevitably the price you have to pay for the other?